This is going to continue our weekly breakdowns of A plus setups going along with the daily candle. So the highest probabilities that you could do. I've already done the breakdown of Tuesdays, and I decided to record my voice. Maybe this can help somebody better to understand it versus reading my breakdowns. So we're going to focus on Wednesday, predicting potentially what Wednesday is going to do. So notice how Tuesday came down, took out Monday's low, and closed back inside the range. Closed back inside Monday's low, right? This is what we call the C2 closure. So I'll mark that. Notice how Tuesday closed back inside. Once I have the C2 closure, right? C2 is Tuesday, C1 is Monday. We're anticipating C3 to go higher, which is Wednesday. So what I do next is I mark the low of Tuesday, then I mark the high of Tuesday. Once that's done, you could also mark Monday's high as target. Once that's done, what I do is I mark Tuesday midpoint. You grab a Fibonacci and you mark the midpoint. You grab the high to the low of Tuesday. And essentially what you want is you want Wednesday to respect the upper portion of it, right? Don't go under. So just do something like this. If we go under, if you're bearish, then that's what you're most likely looking to happen. So now you have your framework. Now you have your C2 closure. Tuesday swept Monday's low. Now you're anticipating Wednesday to go higher. You mark Tuesday's midpoint here, and you want Wednesday to respect it. You have your targets, Tuesday high, Tuesday low, and then you can potentially do Monday's high. Now, this is your daily bias. This is the most important part. If you don't have this, you don't have a high probability play. Can you trade invalidations? Can you trade on not having a bias or with C2 closure? Yes, but you require more experience. Once you're done with this, you go to the hourly chart. And on the hourly chart, this is what you're going to be looking at. This is the same thing that I just explained to you guys right now. Tuesday took out Monday. Now we expect Wednesday to go higher. What I like to see is I like to see Wednesday opening low here and then trending higher. In this case, it changed the state of delivery around London, right? So now it opens low, changes the state of delivery. So it's telling you potentially that the Wednesday wick is in, right? We're basically saying we're not going any lower than this. Once you have that, remember Wednesday open low, form its wick, how to change the state of delivery here. This is the perfect scenario. Sometimes you're not going to have this. Uh, then once you do that, then I go into my trading windows, which I only trade after 10 o'clock. Sometimes I take 9 o'clock trades, but I like to trade the 10 o'clock candle. So what do I look there? I look at the same thing I look here, a C2 closure, but on the hourly. This is a fractal model, right? So what I did is I looked for 9 o'clock, that swept 8 o'clock's low and closed back inside. Same concept as here. So now what do I expect? I expect 10 o'clock candle to go higher. Again, you do what you did on the higher time frame on the smaller time frame, which is the hourly. Once I have my C2 closures and I'm expecting 10 o'clock to go higher, I mark zero point 0.5. If this was a body, this is the 9 o'clock candle. If this was a whole body, I'll mark the midpoint of the body. But in this case, we have a long wick at the bottom. So I just like to mark zero point 0.5 of the wick there. And you want 10 o'clock to respect zero point 0.5 of the 9 o'clock wick. The wick of 9 o'clock can do damage, but the body can stay above it. That's okay. And then notice how 10 o'clock came into a POI, which is one of my favorite trades. When you hit 1 hour, 1 day, 4 hour for value gap, it's a pretty high probability. Once I have the framework there, then I'm allowed to go to the 5 minute. I don't have any business going to the 5 minute if I don't have the framework on the hourly. So sometimes what I like to do is I like to stay on the hourly. 9:30 can open, I don't care. I don't go to the five. I just stay on the hourly. I need my framework to form from here. See, a lot of you guys go into the 1 minute, the 5 minute, you're tempted to see all these swings and get in. No, stay on the higher time frame. Once the higher time frame tells you, hey, you have permission to go to the lower time frame, then you drop to the lower time frame. It's gonna avoid you a lot of losses. All right, anyways, once I already have my framework here, I have a C2 closure on the hourly, right? Or I have it here. Then I drop to the 5 minute. On the 5 minute, I'm trading this 9 o'clock, swept 8 o'clock. Now I expect 10 o'clock. Now 10 o'clock also swept 9 o'clock, so you expect 11 to go higher, but I'm trading 10 o'clock candle. We also have had an SMT with YM here. It's an extra confluence. This dotted line here is 0.5 for the 9 o'clock wick, which I explained. You want 10 o'clock to respect that, right? You don't want no bodies below here. The wicks can come there, but not the bodies. So now what do? I like the same concept. I want 10 o'clock to open low, like I allow Wednesday to open low. So it opens low. It changes the state of delivery here. Once I have this change in state of delivery, it's sort of telling me, hey, the 10 o'clock wick is potentially in, because sometimes it will reverse and you will lose. Nobody has the 100% win rate. And if they're telling you they do, they're lying to you. So once the 5 minute change in state of delivery occurs here, now you can get in on the trade. Now, sometimes as soon as this 5 minute change in state of delivery happens here, like a 10-15, if the candle doesn't expand that much, I get in at the closure of that. Like I'm okay with 10 handles expansion, 15 handles, I'm still okay. But in this case, this candle expanded 160, 150 handles, which is insane. I'm not okay with that. So what I do is I let it retrace. Sometimes it won't retrace, and guess what? It's going to leave me. And that's okay. But in this case, 10-15 came, took out this high here, and normally what happens after you take a high, you have some type of retracement. I spotted this 5 minute fair value gap here. I allowed 10-25 to come and tap the fair value gap, and that was my entry. And normally what I do is I shoot for 2R. I leave runners sometimes, but mainly I take 90 to 80% of my position at 2R. So if you put your stop loss below the swing low, which is the wick of the 10 o'clock candle, you can shoot for 2R, and there's your 2R here. I enter at 10.25 and I exit at this candle at 11.15 and giving me 2R. Now, this whole framework happened from the daily candle because of the C2 closure. And sometimes, I'm sure you've seen my executions, sometimes you have like 6 o'clock, 4 hour candle taking out the 2 o'clock, 4 hour candle like that. And now you have two C2 closures aligning with a daily candle. That's very high probability. In this case, it didn't, but I don't require both, but if I have both, that's extra confluence for me. Um, Notice how price 10 o'clock open low on the 5 minute chart, and then you respect the 0.5 of the 9 o'clock wick that I told you. The bodies are staying above it. Yeah, the wick came below it, but the bodies are staying above it. You allow some type of retracement back into, you could allow the retracement into this order block here, and you can buy there, or if you have a fair value gap, then allow a fair value gap. And if it doesn't expand that much, then you can just enter at the closure of the changes set of delivery and shoot for your 2R. That's all you need. Let me know if you have any questions.